We are live. Hold on.
Participants would have been good with a rate cut in July. Does that mean we're even more restrictive now than we thought we were? So this is what's going through the market's head. Not in a critical moment just yet, but what's interesting to me is they're running the Fed rate cut playbook, the cliche playbook, which is bid small caps and right, like make this thing happen again, even though we tried it before and it didn't necessarily work. So it's interesting. It builds a little bit of suspense for exactly how Powell's stance is going to come off relative to where the markets have come to.
I feel like tomorrow's trading activity, the price action will be really interesting.
Yeah.
It's the day. It's like the dead zone before you really get to Powell.
It'll be a dead zone in terms of no Powell, but we're going to hear from Fed officials all day that are there, right? So Steve's going to have a bunch. We're going to have weekly claims. There are going to be new inputs to the conversation. Mm-hmm. So,
all right, yeah, we're going to have a macro talk here today. Before we get to that, let's look at a couple of let's see the technicals, right? Where's the market headed? I'm waiting for Josh to jump on. Josh Dobson, and we will talk macro. Fake news. No, I mean, the jobs report was pretty, the job revision is pretty bad. We're going to talk about it. Just stay tuned. Or you can jump on YouTube if you want to save it. First, I'm going to take a look at the S&P really quick. Let's take a look at the S&P 500, the equity market. Man, what a rally. We've had, 8 days in a row rally. And now it's pretty much 9, 10. I mean, we'll see. I think it's a really sharp, we're going up pretty fast. And we could break out. It depends what the Fed does. We have the Fed minutes. We are going to go over the Fed minutes when Josh jumps in also. It is not fake news. There was a revision from the whole year 2023 to 2024. And really 818,000 jobs weren't actually there. Why is the market rallying? Who knows? Who knows why the market is rallying? It could be that the Fed is more likely to cut interest rates and the market saying, hey, look, we're going to get easing no matter what. We might see a switch of regimes. We might see the Qs. You can see the Qs, right? The NASDAQ isn't really soaring as much as the S&P. I think we're seeing a switcheroo here. I think we're starting to get a rotation into small caps, a rotation into home builders in different parts of the market, maybe value, because S&P is at all-time highs near. The Qs are not. The Qs are struggling here with NVIDIA. We might get that switcheroo. It's very difficult to rely on the news. I don't trade news, but it doesn't do anything. It depends what you're looking at. The macro does make a big difference, but the macro news doesn't say up or down. The macro news just tells you there's volatility in the market. Okay. If we run over to the VIX, we had that big, Japanese spike 2 Mondays ago. Now the VIX is down, came all the way down to 15, which is, hey, if you're under 15, you're back in the bull market, right? We're hanging above 15 now. We're right above 15. So the market is pricing in some volatility, although the market, S&P is going up. We are pricing in volatility, and the VIX isn't jumping yet. Those revisions weren't, terrible. The estimate was 600K to 1 million. So we came right in average. I think if the revisions were like, negative 1 million plus, the VIX would be up a lot more. And the Fed minutes didn't really tell us crap. Here's the thing. Jackson Hole, the big Fed meeting is coming up, starting today, actually, all the way through this weekend, all the way through Friday. That's where we're really going to tell what the Fed's going to do. Are they going to cut in September? That's what the market wants to know. So we're starting to get volatility pick up. Once you get above 20, once you get above this level, that's when it's, something is imminent. That's where you have an issue. So the market is, you're seeing vol go up at the same time the S&P is going up. And that just tells you the market is a little worried. I see you there, Zoltanic. But the same 100 stocks in the mass and the same stocks in the SP. Wait, what'd you say? But I'm going to read your comment. I don't really understand it. But the same 100 stocks in the mass is the same stocks that the S&P has. Not sure what you mean there. The VIX was dead for a few months. Don't trust the VIX. Fed minutes were from last month. Yeah, they were. Yes, they're cutting. Yeah, they should be cutting. Don't trust the VIX. Well, the VIX, it's, you don't have to trust the VIX. The VIX is a fear gauge. So it's, you're not trusting what the VIX says. You're just getting a read off of, investor sentiment. Are they putting on protection? And they put on protection during the Japanese carry trade, right? We had a lot of protection put on, but it turned out that VIX futures were not even that bad. VIX futures were not the same. The VIX that we read was pricing in much worse news than actually, well, not worse news, but it was pricing in. There was like a spread pre-market spread that the VIX couldn't price in, so it spiked way higher. This wasn't a true VIX, if that's what you're saying. This 64 read, it wasn't a real true 64 fear gauge. That definitely wasn't true. But the VIX did spike, right, for a lot of reasons. And now the labor market shows that it is not falling apart. So the VIX came down, and the Japanese carry trades sort of unwinded. And so the VIX came down significantly. But guess what? The Japanese carry trade might be leveraging up again. It might be leveraging up again. Let me see if we're late. Where's Josh at? See, make sure I send him I think I sent him the right link. Let me double check. Yeah, I think I sent him the right link. He's probably just waiting to come in. Let's see. QQQ is just a tech stock, I think is what you meant. They are cutting the same 100 stocks in NQ equal the same 100 stocks in the S&P 500. Maybe the NQ, I'm not sure. The Qs definitely are weighted different than the S&P. The Qs, the S&P has a lot more value stocks in it, right? Like Visa, tech doesn't have, NASDAQ doesn't have the same stock. So they are different. They're definitely weighted differently. The NASDAQ is a lot more heavily weighted by Nvidia, Apple, Microsoft. It has a lot more weight on it. Did not confirm though. Not 100% sure. Different, but the same tech stocks aren't in the same as a QQ S&P. Sorry, I'm talking to. Oh, you're doing Tox Text. Yeah, I feel you. Yeah, that's annoying. Doesn't come out the same, probably in a rush. Anyways, the whole point here is we do have some macro risks, and we're looking, Zoom's about to have earnings and snowflakes. We're looking for, what the Fed says at Jackson Hole starting tomorrow. Starting today. The Fed minutes, didn't say much other than that there was a couple Fed members who were considering actually cutting, that said, hey, we should cut in the last meeting. If the inflation data gets better, then they're definitely going to cut. So I think we have that cut in September. We'll see if the Fed tosses it up or not, right? Are those revisions bad enough to get the Fed to, are they bad enough to get the Fed to cut more than 25 basis points? Not sure. I'm going to move you over here. Man, I wonder if I gave him the wrong time. Overnight, you said you think they're going to set an emergency meeting overnight like they did in 2009, just like how Japan did a couple days ago. Oh, okay. All right. Emergency meeting. If we're going to get an emergency meeting, there would probably have to be a shock to the system, right? So maybe down the road you do get a emergency meeting. I don't see that happening without some type of shock to the system at the moment. Maybe an oil shock, if oil shocks or there's some type of, some banks start to fail, possibly, but so far, no, we're not seeing that. All right, there we go. All right, what's up, Josh? Man? What's going on?
How you doing, brother?
I'm good. I was live going over the VIX and some stocks, just taking a look at. Everybody's like, what's going on? I don't understand. If the revisions was that fake news? I'm like, no, it's not fake news, but the stock market is caught between a rock and a hard place.
Yep.
See if I can pull this up. Okay, so no, zoom out. Come on, technology. I swear this always happens when I need it most. Hold on.
Yeah, it's always
okay. There we go. Yeah, we'll talk about this big VIX spike, but it wasn't fake. It was real. It just the magnitude at which it spiked was kind of fake. Yeah, the magnitude was kind of fake.
They were looking at it from the perspective that was it actually good news that the Fed was going to be lowering rates, and then looking at the technical data. I mean, obviously, with the revision in the jobs report, that was what really killed it.
Hey, can you adjust your volume a little bit? I don't know why it's so bad. There we go. I think that was let me see.
Can you hear me now? Pretty good?
Not really.
Okay, let me try something else.
Okay, no, you're good. Okay. What does he say? Yeah, catalyst some more fog falling, just like what happened at JP last night. Over there in Japan.
Yep.
And China, I think China a little bit too. Hope you guys had a great green day. I didn't trade today. I'm short the S&P, so I'm actually hoping it goes down. I'm short the S&P at the moment. I don't think it's going to make a new low though. A lot of people think we're making a new low. The macro is still solid. That was a fake VIX spike. We could make a new low. There's a lot of catalysts for that, but the backdrop I don't think is set up for a new low because the Fed is up 5.5%, so they can cut. It's not like they're at zero. They can cut if they need to. They can re-liquefy the market. So I don't see a new low. Go ahead, drop. Let me hear your volume again.
Yeah, can you hear me just fine now?
I don't know why it's off. Anybody in the comments, is his volume off? Let me see. Let me check my.
How does
There we
this sound?
go. There we go.
Does that sound better?
Yeah, that sounds better.
Okay, I'll just switch to the iPhone audio.
The iPhone. Okay, there we go. I just lost one of my AirPods. I was so pissed.
That's the worst, man.
It's the worst.
Gotta be better for that kind of stuff. They gotta have like some sort of magnetic so that they connect together and you don't ever lose one.
Yeah, I don't know. It didn't make no sense. And then you use the tracker and it doesn't even connect to the doesn't even connect. I'm like, okay, so what's the tracker for? Come on. How's everything going?
Good, man. Can't complain. Good. Gotta love when bad economic news and rate cuts usually help with interest rates.
Yep. I got on the bottom. I got a couple, topics running at the bottom so I don't forget. But what was I gonna say? Yeah, mortgage. It looks like refis are going up. We'll get to that part. I wanted to start with this VIX spike really quick, just to run through where we're at, and then guess what though? I wanted to say here. There's the comments. Is the she legit? I got that stuff.
Yeah,
dude. I took too much one day and I got like sick. I got bloated. I got bloated and I lost my appetite. And I know after a lift, if I don't eat, if I'm not hungry, something's wrong.
Yeah.
Volume.
You're not supposed to take a ton, bro.
I know. I always do that. I overdo things. I'm like, okay, what's the limit? And then I learn.
Ease into it, bro. Ease into it.
Ease into it. Yeah. That's a good thing I never did steroids. Yeah. So, we got a lot. Let me make sure cover these dudes. Yeah. Okay. So Harris tax plan. Yeah, we're gonna go over that crap. Better now. All right. Cool. We got that. So real quick, the VIX carry trade. Just so you guys know, the Japanese carry trade, the VIX spiked. It was basically, and I have the Japanese yen versus the dollar up here. The Japanese yen just spiked versus the dollar. And I guess in Japan, if you go to Japan, you borrow yen, it's 0% interest rates to borrow. So for the last, 20 years, people have been borrowing yen, buying dollars, and then buying tech stocks. And so all of a sudden the BOJ hikes interest rates and everybody freaks out because now your costs are bigger. Now I didn't know this. I was like, okay, your interest rate went up barely, which is probably, if you're in $1 billion, that's a lot. But then the currency goes up. And this is where you kind of know that, but I never thought about it. If your currency goes up, all the debt you borrowed also gets bigger, and it's bigger than if it's getting bigger and your rates are up. Now you're pushing, okay, margin call. So this was the global margin call basically.
Yep.
And everybody had to, pay back their stuff. So you got the VIX spike and it wasn't a real spike. Come to find out, I remember that Monday I was tripping. I was like, no way, no way. I couldn't sleep at night. I woke up and I was like, we're still dropping. What is going on? What is this? Not another black swan. That was the bottom. That was the bottom of the market. And come to find out, it wasn't as bad as we thought because, who knows? Who knows if it's even unwound completely? But the BOJ came out and said, hey, sorry, we're not going to hike rates again. I think Janet Yellen probably called them up and said, don't do that shit again.
Yep.
Don't be hiking rates on us because the dollar fell, which we want the dollar to fall, but we don't want it to fall that fast.
No.
Versus the Japanese yen. The whole system is just a mess. It's just a mess.
It's on a razor's edge, man.
It's on a razor's edge, 100%. So we have that come down. Then it drops all the way to bull market territory, and the stock market is right back to the high. So I'm like, and I got short too when we came up about right here. I got short. I was like, there's no way this is over. We still got the war. We still have Kamala Harris leads in the polls. The stock market's like, hell no. We still have a lot of other risks in the market. People just getting out of tech. And boom, we just keep going higher. So it's, for the stock guys or the, crypto guys, we'll talk about this. We'll go into it later. We did talk about it, but let's talk about the underlying macro risk. So first up here, we have the 800,000 job revised down, right?
818K.
818,000 jobs revised lower. You called it earlier in the year. You said, hey, it would show up at some point. So what are your thoughts on that?
I mean, it's not a shocker. The number's probably a little bit larger than I anticipated, but I guess that's kind of what happens when you fudge the numbers for an entire year. There were a lot of estimates that were somewhere between 600,000 and a million. There was a lot of people calling for a million. I felt like that was probably a little too much, but I mean, you got to remember, we talked about this, the information that the BLS is using to factor what jobs are being created, and the data they're using is archaic. And because of that, they're, the information isn't as accurate as it should be. And I think, honestly, at this point, there needs to be some sort of investigation into the BLS to find out if that was done intentionally or if it was just operator error. Because, I mean, that's a lot of jobs to mark down in a 12-month span. I think it's the second largest drop or revision lower in the last 15 years. And what happened 15 years ago was the Great Recession. So it makes you wonder, was this part of the plan to try to hide this and keep this, from playing out the way that I've been telling you and the way I've been talking about this, is that we are in a recession. We've seen the job losses. We've seen these, they're not being reported somehow, some way. And now all of a sudden, here they are.
Right. So biggest revision since the 2008 financial crisis, which if you go back, the economy's fine, everything's cool. And then all of a sudden, boom, we had to revise the data. We're missing 1 million jobs. The market's like, okay, wait a minute. So we're looking at nothing here. Boom, everything starts to trigger. Now I doubt we'll have that kind of crisis, but it's always a surprise. If you get a surprise, where is the surprise? The carry trade was a big surprise. Nobody saw that coming. Who knows what is it in real estate? Maybe commercial. Do you think a surprise could come from commercial real estate?
I mean, most of the information that we've been getting is that the commercial real estate market was going to be where we were going to see the crack. But in all fairness, we've not really heard a lot about it. So, I mean, either they're finding liquidity with the Fed and propping themselves up, or we're just not reporting on it. But the regional banks are still at huge risk, especially as long as we keep rates higher. So, I mean, there's the chance that the Fed can lower rates quickly enough that it mitigates the risk for commercial real estate. But at this point, I mean, we've heard Powell, it's data driven. What happens when your data is wrong by 1 million jobs? Does that mean you need to cut faster?
Right.
Because it's heading down faster than you thought and we're not getting the soft landing? Or is this, okay, we'll start cutting now and we'll do our small increments and continue to stay data driven and hold out longer? And hold out longer, we put the commercial real estate market at a huge risk, because, I mean, it's already there.
Right. What's crazy is even the release, because we're talking like, hey, who's fudging the numbers here? I heard a lot of people on Twitter saying, well, they have such a hard job to have to revise the numbers. It's tough to get all this data, but it was tough. It's always tough before it's always tough when it's political, right? Also, they don't even give you the damn number in the report. They make you do the math, which is ridiculous, because it's like, okay, why are you trying to hide, what's really going on here, which is we have the best tech. This is not 09. We have the best technology we've ever had. How are we missing so much data, right? It has to be, is it intentional? Like the COVID numbers, like these other numbers, is it a little more intentional or not? We don't know. But for sure, what I think, what I'm seeing here, because I can't figure it out. I'm like, all I know is I'm long bonds. All I know is I'm like, look, let me buy some call options on bonds. And I've been showing it on Twitter for a while. The bond market's picking up. The markets always know beforehand the news, and it's breaking out finally from what was this from? Make this look from 2022, I guess. I mean, This was the biggest bond collapse in history, going back to TLT at least. Maybe in like 1929, the biggest crash ever. Maybe the bonds crashed too, but we had a big crash. Now we're starting to break out, and I'm like, okay, this is a signal. Bonds are climbing no matter what. Even if the Fed cuts, bonds go up. If something comes down significantly, bonds go up. Now the weakness, I'm thinking, this is what I'm thinking. Walmart reported good. Target had good reports. So obviously consumers are trading down to some degree. Maybe it's the luxury companies who really topple here. The luxury real estate topples here because people are just trading down. Does that? I don't know how bad that is. I know Barry Sternlick, he's also now going to sell a portfolio, one of his portfolios, his real estate portfolios, because I think he's underwater and he wasn't allowing people to pull out of his real estate fund. Now he's selling that. So maybe there's more to come here, but I'm thinking it starts at the luxury side first.
Yeah, I mean, the one thing you need to take a look at, because that was something that was pretty interesting that I had seen, that the earnings reports for Target and Walmart and the consumer spending seem to be pretty strong. But again, we're talking about data that's being provided by some sketchy areas of the markets. If you go back and you look at the sales tax data, so state sales tax data, in that data you're seeing that sales tax has dropped off a cliff. So people aren't buying as much as what the consumer spending report is telling you, and the sales tax data is pointing to the fact that the consumer is spending a lot less.
Okay. I see that, man. I see that. And then we're in the dead spot too. Like I always say, August, nobody's spending money. They're going to wait for October. If they have it, savings are running out. What else? What's the name of the report? It is the report is it's a bunch of crap, but it's the BLS revisions. You should be able to find it on Google, the BLS revisions.
There's a ton of articles on it.
But yeah, just go look for the payroll revisions. And you have gold breaking out. So you got bonds picking up. You got gold breaking out for the first time in ever. This is the gold breakout for our history, ahead of Bitcoin, damn it. But it's moving. So gold is telling us something. I believe China and somebody else are just accumulating a lot of gold. They're not selling it. Also copper. Is this a war? Who knows what they're getting ready for? But this is weird. You have bonds breaking out, you have gold breaking out, and stocks are breaking out. What the hell? So everything is just breaking out except what is home builders. That's what I was gonna say. Home builders are breaking out too because they're anticipating the cuts.
Yep.
Right. So jobs are weaker than we thought. Plus you have all the illegal and legal immigration. So it's like, damn, how is that bad? How is it that bad? Manufacturing is negative. So we go to that. If we switch over here, see if I can switch quicker. Switch over here. We have this data for August, and I was like, damn, there's no way. ISM, it's in recession territory. I mean, it's dropped 2 months in a row, 3 months in a row, down to 46. Just couldn't get it up. It needs the Viagra pill. It's just not there. It needs the Fed cuts. And yes, services were up. They were positive, but for how long? For how long are services going to be positive? I mean, it's a trickle down effect, right? These non-farm payrolls, forget that. Nobody's going to care anymore because 800,000. Are you kidding? A million, basically a million. Unemployment's climbing. At least that gives us a clear signal. That's starting to roll up, and it's not going to slow down. It doesn't just stop right there. It's probably going to accelerate from here, higher than what the Fed expected. Okay, yeah, we had services go up. Used cars collapsing. Well, the prices are collapsing.
Yep.
PPIs. I mean, inflation's down. I think inflation's done. I think we're done on inflation. You might disagree with me on that, but I think inflation is done at least.
No, and when I mean, even Powell said it himself that there's good indicators that inflation has maintained the trajectory that they were hoping for, and that they're confident that it will continue to go down.
Right. And that's the only positive here for markets, at least. I mean, for consumers, inflation to consumers, inflation it's up because they just see higher prices from before.
Right. But they're still reeling for the last 3 years up over 20, 30%, sometimes even 50% on certain items. So, you know, we're talking about a huge price increase that they're having to get more comfortable with. And that's normal in a high inflation market. Typically what happens next is we should see wages grow as long as the economy is doing well. But if the economy is not doing well, people are losing their jobs, the unemployment rate's going up, wages aren't going to rise, and we're going to see even more problems with inflation as far as being able to afford the goods that we're used to living on.
Right, because a lot of these companies are finally starting to lower prices, and I know people get excited. They're like, "Yeah, finally they're lowering prices," but that also means your wages are not going up. That also means they're going to be firing, and when they fire, they do it quickly. They do it very quickly,
Mass layoffs.
and yes, mass layoffs. And who's not going to get mass laid off? Well, maybe some companies don't do the mass layoffs, but in general, consumer, there's no way these services keep up with this outlook. Retail sales came out strong. This is what kept the market up. The retail sales pumped, but it's like why in July are retail sales up? Are people hoarding? Is this even real at this point? We need blockchain. Is this even real?
That's the part that I'm wondering, because again, like I said, I went back and looked at the sales tax data, and the sales tax data doesn't support that.
It doesn't. It doesn't. And really, the trend is not going up. The retail sales year over year is, even if we did get that 1% bump, it's still
Flat.
like bleh, it's still subdued. It's in the crapper. So we need the cuts. In my view, we need the cuts. They better cut. Let's see, housing market index declining. Yeah, home builders are like, nope. Well, at least the survey. What else was it that I was thinking about? It was industrial production. That's another one that who is it, the people who call the recession, the National Bureau of Economic Research, they use industrial production also. That thing, it went up, like it finally had its biggest move since 2019, and then it just crashed negative.
Yep.
So I'm like, what the hell is going on here? A lot of mixed data. At this point, I'm just like, I think we're weaker. And then sentiment goes up a little. Well, I mean, month to month, it goes up a little bit. But who knows who they're surveying again, right? Who they surveying? Baby boomers? I never got a survey.
Polls,
right. It's the polls. You can't trust crap. This is why I'm so bullish on crypto, because all this data we're starting to realize is bull crap.
and it's
So housing starts, and I was going to kick it to you on that. Housing starts are still in the dump. So what I see is that refis are picking up because those bond yields fell tremendously.
But I told you, you start to see those bond yields start to do their thing. You're going to see refinances increase.
Yep.
You've got people who are looking to tap into that equity to pay off some debt. You've got a majority of the refinances that are going on right now are the people who bought from about 2022 to 2024, and they're sitting on like 8% or 7.5% interest rate.
Right.
You still don't have a lot of the people who are sitting on the 3.5 or 3% interest rates refinancing. It's a lot of the people who, have those higher interest rates from purchasing, lowering their interest rates. So we really haven't seen a huge flood of refinances, but we hit 5.5% on a 30-year fixed rate mortgage. You're going to see a ton of new inventory, a ton of demand, and a lot of people refinancing.
So a lot of those people who basically, I think this is it right here, 30-year mortgage rate, who financed at like high sevens, they're basically just refining. How many times can they refi?
You can refinance as many times as you like, as long as you can qualify.
As long as you qualify. Okay, so they're just like, any points lower, we're going to refi.
Yeah, and that's the part. I actually was on my social media, and I was like, look, now's not the time to refinance. If you bought your house at 7.5%, you obviously can afford it. If you're not struggling, you should hold off for another 12 months, because in 12 months, you're going to drop your interest rate 2%, not 1%. But there's a lot of people out there selling everybody, rates have dropped 1% from their high, let's refinance right now. And they're just throwing money at it because they're going to be refinancing in another year.
So what's the downside of refinancing early?
So you refinance too early, you're paying refinance costs. So you're either coming out of pocket or you're rolling into and financing the cost for the refinance, which is anywhere from $4 to $10,000 in costs to refinance that you're rolling into your loan amount. You're extending out your period. So if you refinance now and then you refinance it again in a year, you've actually wasted money, because there's like a break even point when you're doing a refinance that you should look into. How much am I saving per month? How many months is it going to take me to recoup the cost of this refinance with that savings? And that's when I should start saving money and am open to do other things like selling or refinancing my house. But a lot of these people that are refinancing right now are going to be the same people that are going to be looking to refinance in a year. yeah, they're going to be saving interest, but they're just extending out that break even point to like 3, 4, 5, 6 years down the road, and they may not even stay in the home that long. So they're kind of wasting money.
Okay, that makes sense. So they're getting excited. They're probably being told by a lot of these real estate agents like
Oh
refi
my
now.
God, dude. All the lenders on social media about, hey, rates have dropped 1%. Come and refinance now. And I'm like, just stop selling them the bill of goods. It's the same people that were telling them, get a temporary buy down because rates will come down next year and you can refinance then. And those are the same people that put them in 3 years ago. And now their rates, their fully amortized rate at 8.5%. And they're struggling with those payments because they couldn't afford them then. And they were getting a temporary buy down, assuming that rates were going to drop in a year, and they didn't. I mean, that's the part about this, that you have to just kind of look at the economics of it. And we know for high chance that we're going to be somewhere in the mid to low fives come next year.
Right.
That's
Oh,
just
for sure.
where this
Yeah.
is headed with everything that's going on economically. The data is pointing to it. And I mean, the jobs revision kind of just sealed the deal for us.
Right. Yeah, I think it did. And it looks like even though we have refinances going up and those people are losing money, the new home buyers are like, hell no. Applications negative, crazy negative. So nothing going on there, I guess. And you know, the funny thing is that's why people have to learn investing, even though we're seeing a trash market for, I guess you would say, on the ground real estate. The real estate stocks are picking up. I mean, this is the home builder ETF, and there's a lot of individual names in here. I think I have them on here. This is my macro. A lot of the individual names, you've probably heard of them. You've probably dealt with them. KB Homes, pretty much at all-time highs. I mean,
they're making a ton of money.
There we go. KB Homes, all-time high. I guess it looks better like this. KB Homes, all-time high. Toll Brothers, about to be at all-time highs.
Yeah.
I don't even know. Builders First Source. I mean, it's not at all-time highs, but it's trending very strong. Lennar, breaking out all-time highs. Home Depot was picking up, but I was a little confused by this one. I thought people were waiting. Maybe it's the refinancers, right? They're refinancing and then they're going to Home Depot and trying to prop up their house, I guess, or make it more
I mean,
valuable.
you got a lot of people that are looking to improve the house that they thought they were only going to be in for a couple of years because now they have golden handcuffs. You know, they're in their 2 or 3% interest rate and they know they're not moving anytime soon. So now they're looking to improve the property so that they can at least feel comfortable living there. I mean, that's a big reason why Home Depot is being the success that it is. But I mean, you gotta understand something, that this election has brought to the forefront one of the biggest issues in the United States housing market is, which is a lack of inventory. So with there being a lack of inventory, who do people turn to when they need new homes, right? They're looking at the builders going, these guys are going to be making money hand over fist for the foreseeable future because the government's going to have to do something and they're going to have to start building homes. So they're going to have to start making money. So how are they going to do it? Well, let's invest in them and see what they do.
Right. Yeah. And there's a lot of fiscal policies that are making somebody money from what I've seen. A lot of fiscal policies that are like, hey, I guess the South, like, I'm sure you heard of that new, what is it? Is it Kamala Harris's policies about 20K off your house?
Oh God, you mean the $25,000 first-time home buyer?
Yeah.
credit?
Yeah,
Bro. Okay. First off, we don't need to increase demand. We do not need to give people money to buy a house. That's not the issue. The issue is the inventory. What we need policy that reduces the regulations on the builders so that they can start building cheaper homes, so they can build more homes, so there's less red tape, so that we can build more inventory, increasing supply, which can bring price down, which then makes it more affordable for those people to buy a house. Adding $25,000 into their pocket to purchase a house isn't going to help them with affordability, and it's not going to help our situation with the housing shortage.
and that crushes the home sellers, right? Because they're going to end up absorbing some of those costs.
Well, if you think about it, you give first-time homebuyers $25,000. That just means that you've increased demand, which means prices are going to go up.
Okay, so
sellers are going to
irrelevant.
make more money because they're going to be like, well, everybody that's buying a house right now got 25 grand. I can increase my purchase price and people said 25 grand. It's not a tit for tat, but it will be a large increase in prices with a $25,000 home buyer credit.
And who's more likely to remove that red tape? The Biden administration, the Harris administration, I guess, or the Trump administration? Who's more likely to deregulate for these home builders?
Well, I mean, that's just a silly question. We already know that. I mean, you gotta ask yourself this: who wants less government involvement, which in turn lowers costs, lowers price, or who thinks that it's more government and we just throw money at it and maybe that'll fix it, but that just makes the problem worse because it just increases prices, increases regulations, and causes more of a problem.
Yep, 100%. And I guess we'll dive into these damn tax policies because I don't really the housing stuff. I'm like, oh, cool, but I understand from a market's point of view. If you okay, you got the whole 25 grand here, increased demand, you constrain supply, prices go higher, faster. People, it's stupid. It's a quick here. I'm doing something for you in the short run, but really it's screwing everybody in the long run, right?
Yeah.
Same thing with the damn taxes. This pissed me off the most. Everybody on Twitter, everybody I know that's in crypto is pissed. You're going to implement, okay? And this is basically the Republican, Democrat, who cares? It's just stupid policy to increase the capital gains.
Oh, the
Um,
unrealized capital gains.
unrealized capital gains. Are you kidding me?
Hey,
Are you kidding me?
That affects real estate too.
Does it?
Yeah.
Does it? So if
Unrealized capital gains applies to real estate, stock, crypto, all of it. So if you own a house and you don't live in the house as your primary residence and you're not exempt from capital gains, so let's say you own an investment property that you haven't lived in the last 2 or 5 years, as that home value goes up, the appreciation, that is unrealized capital gains.
so it destroys the real estate.
Real estate investors are like, they're not getting any of that money until they sell those properties. So that forces them to sell. And now you have less housing, less affordability. And it's just an asinine, ass backwards way of raising revenue. The problem is not raising revenue in this country. The problem is spending.
Right. And two, for the stock market, if you do that, what is that going to do? I mean, come on, everybody's here chasing, they buy low, sell high. But if the big money guys are like, look, we can't make money here, and they sell, you're looking at a sideways stock market for 4 years, which hell no, the traders will love it, but the investors, you're going to destroy the stock market for a couple of years if you do that. There might be a couple sectors like tech that still goes up, but that's insane. That's absolutely, your Bitcoin goes up from 50 to 100,000 and you have to pay, you didn't sell anything, but you still owe on it. That's insane. Nobody's going to pay that. That's just crazy.
Yeah. You owe like 20 grand.
And then you're increasing corporate taxes. And I don't know if people know a lot about this, but you want lower corporate taxes because lower corporate taxes means they expand. When they expand, they hire more people. They build more, building more jobs. Construction goes up. If you increase their taxes, they're going to unemploy people. They're going to cut employment. They can expand. Guess what? There's not as many goods or services supplied to the market. Therefore, prices go up. You actually cause inflation. And guess what? It's coming out of our pockets because it's bigger government. You're saying you're giving more money to the government to create more fake jobs, as we've seen, more government jobs where you own nothing. You just give it to them and they make sure you're secured, but you learn no skills, you gain nothing. And really what's going to happen is all our entrepreneurs are going to leave. They're going to go someone, Switzerland, I don't know who it's going to be. They're going to do the opposite to attract, right? All the entrepreneurs, all the business players are going to leave. I mean, who knows? Maybe one state can do something, but it doesn't look optimistic when you do that, when you raise taxes. This is absolutely insane. Corporate tax and then tax the rich too. That probably makes the most out of all these. That might be the least damaging, but it's still going to send those rich guys, right? It's going to send them somewhere else. It's going to send them somewhere else. So none of that makes any sense. Okay, so those are our risks right now. Look, the job market is worse than we thought. The Fed is going to have to cut rates. Now, I'm interested to see what they say. Jackson Hole starts today. It goes through Friday. We'll see what all these Fed members say. We're going to listen to their rhetoric. Are they going to be more, are they going to pitch up a cut? Are they going to pitch up cuts? Is it going to be 25? Is it going to be 50? Who knows? But either way, the market, at least the stock market, if you guys are invested or trading, stock market's not going to like if the Fed remains kind of hawkish. If they're still hawkish after this job revision, and they want to cut because inflation's coming down, but it's not coming down for the right reasons. I want to say it could be slipping because of that consumer spending. And I like it. I mean, if you're non-business, if you're just an asset that like Bitcoin or crypto, I think it still does well because you cut rates It doesn't have earnings. You're just literally making it cheaper to own that. But for stocks in general, for businesses, they're going to struggle. Other than Nvidia, obviously, but that's not good. And some of that's reflected here. I mean, look at this. Everybody remember Celsius was a loved stock, and this thing is down. I mean, it cannot catch a bid. This kind of just shows us the premium buying. People are turning to coffee now, I guess. Back to coffee, 63%. Their earnings, their guidance came down significantly. Might be a good buy if you get rate cuts, but just some of these companies, I'm like, this does not look good for consumer spending companies. Stay out of those companies. Get into, I don't want to say get into, I like bonds right now, but it's just, this is ridiculous. How do you go from that hot to getting crushed? 63%. Same thing for Chipotle. I mean, they did switch their, Chipotle did switch, did get rid of their CEO, but this
they're
is just
struggling. They're struggling from a just consumer side of view of them right now with the portion size. They're struggling just on the metrics or the visuals of them.
people are complaining about the portion size shrinking finally.
Yeah. Well, I mean, people are doing videos, and now they've got even more videos coming out that the people that are working there are basically denying service for anybody that's filming.
Really?
Yeah.
And I wonder if they let you do the trick. We used to trick people, or not trick them, but what you do is you go and you say, "Let me get a scoop," and you let them do a scoop, and you say, "I'm sorry, I wanted a double scoop." Because if you tell them double scoop, they barely scoop it, right? So they're probably catching on to it, But that just tells you if Chipotle's pulling back, they're losing revenue considerably. And now people are going to say, okay, so you might get like Walmart's exploding because people are like, okay, let's go back to Walmart where it's cheaper, but hey, your health, I don't know, that meat looks pretty suspicious, man. I'm serious. Aldi, I go to Aldi.
The lab grown meat's going to end up first.
Yeah, that's true. That is true. So it's not looking great. Those are our risks there. Looks like we are going to hit the recession. And then we got the Middle East too. What the hell is going on there? Do you think is the US going to get pulled into this?
I don't think so. I think what you're gonna see is a lot of proxy still. I think it's just gonna stay proxy. I don't think Iran's, I mean, unless Israel does something ridiculously stupid, I don't think we're gonna see them expanded into Iran. But obviously if Iran gets involved, the US will have to get involved. But I don't think Iran's gonna get involved.
Yeah, I don't think so. I don't think any of them can afford it. We think we're broke.
Yeah, I mean, even Russia was there in Iran, or Putin was there in Iran recently. And the idea was, I mean, there was a lot of narrative talking about how Putin's pushing him to start the war. I think Putin's looking at it, telling him like, look, dude, you need to stay out of this. I can't afford to, be fighting two wars. Cause I mean, Russia's supporting Iran. So they've got to fight in Ukraine. They don't have the means to push the war out to Iran. I mean, unless China gets involved, which completely feasible. But the issue that I see is that I think Putin's probably pushing Iran to stay as far out of it as possible, using their proxy to stay involved, but not get this escalated too much further.
Yeah, that makes sense. Did you hear about also that day where I guess Taiwan was warning their people to get ready for an invasion? Did you hear about that news?
Mm-hmm.
It never really made headlines, so I don't know if it was fake or not, but that was probably a little more concerning.
Yeah, but to be honest with you, I don't think China they're not looking to start that war. I think China's more of the calculated, we're gonna overtake things more of on a political scale, infiltrate and work it that way. I don't think they're going to try to push their military force into this because they know that, albeit they can get there quickly and they can get it taken care of quickly, that would be a long drawn out battle with the United States, and I don't think they feel like they can win that one.
Yeah, and we can look at oil too. It's been kind of giving us, oh, the war's picking up. Oh, never mind. Oh, the war's picking up. Never mind. That's literally that's literally oil prices right now, and I think oil's getting ready to dump if the report is correct.
Yeah,
which will be good for inflation, but we need the cuts. It's like short. We're gonna get some pain for a while. We're gonna get some pain, and then we'll probably shoot back up from a risk asset perspective. But some businesses may be systemically crushed for a while, especially if I'm not sorry to say, I really don't care. We do not. I think Kamala Harris is seems like she's getting a little more extreme left. Worse. So,
Starting to?
well, I thought she was stepping away from it at first. I thought she was going to distance herself and go middle. Now it's like,
No, that was simply her. From what I'm hearing, a lot of that is centered from the DNC, Obama, and her staff, basically telling her, "Look, lie, cheat, steal. Be more moderate on the platform for right now. Do whatever you want to once you get in office, but you have to be more moderate." The problem is that anytime she gets in front of a microphone and she's given free freedom to speak, she is at heart a Marxist, and she is going to spew left-wing ideology that is Marxist, right? So
right,
a ban on price gouging. We all know where that leads to. And historically speaking, every time a country's implemented that, we've had food shortages, food lines, mass starvation. So that's her policy. And I think that the biggest problem that people have to understand is that if she's elected to president, she's going to be pushing a lot of these policies. Yeah, she may not get a lot of them through, but that's not what we need. We need a more moderate person who's willing to work to get things done that can improve our economy instead of pushing these, far left ideologies that can really put a hurt on this economy and the people of this economy.
right. All it does is make government bigger and bigger and bigger, and they don't produce goods or services.
Well,
So,
just look at the EV chargers. They've built 8 of them, and it was like an $80 billion project.
right. And where's that money?
It's nobody can account for it. I mean, they really can't say it's been dispersed or not, or if it's held up, but they allotted $80 billion to build EV chargers across the US. They built 8. And then you have high-speed internet. $75 billion, I think, is what they spent on to get high-speed internet to everybody in the United States. Not a single line has been laid.
Nothing gets done. Nothing gets done
So they
unless
passed the legislation, but nothing actually gets done. So it's
right.
all lip service.
And let's walk through this price gouging for someone who's listening on here who thinks it sounds like a good idea. Price gouging is what the idea that McDonald's or corporations are increasing prices to take your money when really they have to purchase, right? They're purchasing the materials and the resources are more expensive for them. The supply chains are backed up, so their prices are higher. They don't create burgers out of nothing. They have to purchase that, so their prices are higher. So if you reduce, first of all, most of their margins, like a lot of restaurants, their margins or grocery stores are terrible. Most of them are about to fail.
Yeah, 2% right now. Most of the grocery stores are, well, actually, most of the distributors to grocery stores that are in the negative, about 1%. Grocery store margins are about 2% right now.
Right. So those businesses will fail if they do the price gouging. If they implement price gouging, whatever, they fail. So guess what? Okay, they reduce the prices for my chicken, and then those people go out of business. Okay, some people are losing employment there. Also, now you have less supply, and then prices go right back up. It doesn't fix anything. It doesn't fix anything. You need
massive. You end up with massive shortages because the farmers can't produce something for less because of all the regulations that we have on farmers and all of the red tape that they have to go through to produce their ag to sell it, right? So they can't reduce their price. So their price is fixed. It's going to the market for what it's going for the market for. So then you set the price. If that price does not allow for enough of a margin for it to pass through the processing and the distribution and the grocery store, someone's losing money, or all 3 of them are losing money to sell that item. So they stop selling that item. That farmer now loses all of his sales and goes out of business. So you lose just chicken, for example, right? Chicken farmers sell them for $3 chicken to Tyson Foods. Tyson Foods processes it, sells it to the distributor for $6. The distributor sells it to or for $4. And they just, as that bottom line, if it's not adjusted based on what the actual cost is to take that item to the store with the profit margin that's required for a business to run and operate, you miss out, and one or all of those fail, and you no longer have that item in the store. So then you start seeing grocery stores start carrying things that aren't related to groceries. So you have more Walmarts and more Targets that are selling clothes and novelty items, but they're not selling food anymore because they can't get food to the shelves because there's no distribution, there's no processing, and there's no farmers that are getting the food to them because they can't afford to take them to market.
Right. And that kind of echoes what happened in California when they raised minimum wage, right? Because it sounds like, oh, wages are higher in California. Well, a bunch of businesses failed. So unemployment also rose in those areas. And are we even getting those jobs? Are we even getting reports on that?
At McDonald's and all of the fast food restaurants. Now you go into a fast food restaurant in California, there's nobody taking your order. You get a kiosk, you order there. They have 1 or 2 people working in the kitchen in the back making the food, and that's it.
Right. So terrible policies. I don't even know who's I mean, I get it if you're supporting Kamala Harris because she's a black woman. I get it. My aunt's a black woman, but it means your economy is much worse. It doesn't help you out. The young kids, I guess they believe in this. They think it sounds good emotionally, but they have zero clue how things actually work. And there's no investment. Also, your 401k is going to drop. If you're older, your 401, what are you doing this for? How does this make any sense? The stock market's going to drop. It's not going higher. Tech will always go higher. Technology will always go higher because you need it eventually. But most people are not in tech, right? Most of the baby boomers are not in tech. You're going to have less jobs and the government gets bigger because now it's like, oh, we'll just sign up for a government job, more teachers, more social services. We don't even need that. We don't need that. We don't need more mass social workers. They don't, for what? We have a mental health crisis. We're increasing mental health people. Like I was in that field and it was trash. The DSM, they changed things that were mental illnesses to now normalization. I was like, okay, I'm out of here. Can't talk about Christianity, but you can talk about what's her name? Twerking at Kamala Harris's thing.
Megan Thee Stallion.
Yeah, you can do that. So mental health is all over. What I think is if we elect her, there goes the nuclear family, right? No disrespect if you're a single family mother, if you're in that situation, but the nucleus family is the core to prosperity. You need a leader, you need a man, you need a woman to some degree. It doesn't mean it has to happen. It just means the nuclear family is what held things together. And without that, you get low population destruction. That is the destruction of the economy. No population growth, just like South Korea. They're like 0.7 birth rate. That means most people are not even having one kid.
Look at Japan.
They have robots for girlfriends, right? And it's a disaster. So these are all disaster policies, and they're getting worse. I thought Joe Biden's was bad. Man, this is even worse. So,
did you hear about the Planned Parenthood RV out in front of the DNC giving away free abortions and free vasectomies?
Are you serious?
Dead serious. They had to wait.
I just saw the van. I didn't know what was going on there. I thought it was normal. But so they're pulling up like selling hot dogs.
Actually, they're selling hot dogs too. So you get a free coupon for a hot dog if you get your abortion or vasectomy with the RV there at Planned Parenthood in front of the DNC.
Stop playing.
I'm not joking. dead ass.
Wow.
No cap.
This is insane. This is a clown. I guess China and Russia are like, we don't really need to step in and do anything.
I think that, okay, so here's a theory that I have, and this is way out conspiracy theory, but there is a ton of data and there's a ton of information that's been written in the past about how to defeat the United States. And it is not a war. It is simply infiltrating the politics, the education system, and the economy, and simply just tearing it apart from the inside. So if you look at the mass immigration, a large portion of the mass immigration is coming from non-Christian countries, pushing ideology that is very anti-American. You have the Department of Education, which has not substantially increased any metric since they became in charge of the education system. So if they're responsible for the education and they're not improving the metrics, what are they doing? Well, we've started to hear about the things about transgenderism, the books that they're putting in the schools, the things that they're actually teaching the children, the social programs and the social justice warriors that are coming out of college. There's a lot of information that looks like there's a 45 point to bringing communism to the United States. And if you look at that 45 point pamphlet, a lot of what people are talking about and that we're starting to see is happening is what's been going on and could be believed that this is part of communist China and Russia's plan, which was infiltrate the United States with this woke mind virus that Elon Musk likes to talk about. And that's where we start to see the destruction of the United States.
Right. I mean, it happened to Mao in China. They did the same thing. They basically militarized, you know, mechanical or not mechanically, but emotionally militarized the young university kids because they're very malleable and they want to be accepted. They want clout. They want attention. They didn't get it from their fathers, their mothers, whatever. And now they're out there mobbing people for, you know, emotional reasons. I don't even want to go into this stuff because I'm like, thank God I'm over here in Goodyear. It's very conservative where I'm at. I don't even see how they voted left because where I'm at, everybody has guns. It's not even just that, but bro, what are you wearing? Like you're not a woman, bro. Like don't go in the men's locker room. Somebody did that. They went in the women's locker room. I'm sorry, a man, and they kicked him out because their kids are in there. And I'm like, dude, hell no, hell to. I don't care what the rules are, how you feel. You're not doing that. That's just inviting. You know what? So
I mean, honestly, it's identity politics at its worst, and I think that's what's really causing the biggest problem with what's going on in our political system right now and our economy, because we're so focused on these identity politics, whether it's transgenderism, black, white, brown, Islam, Christian. I mean, there's so much identity politics that it's driving this huge wedge, and you can see where the masses are starting to grow in certain sections that are okay with the big government and then telling you what you can and cannot do. And so I think the biggest problem with this economy right now is that we have to step away from this, and we really have to get back to the morals and values that the United States was built on to really push the agenda that there are things that we need to do for ourselves.
And a lot of the blacks too, they're voting, they're hard Trump now because they're seeing their jobs disappearing, right? And again, nothing against the immigrants, right? It's good or bad people. If you're an immigrant, you're a good person, great. If you're not, get the hell out or get them out, right?
Yep.
And it just comes down to that. There's good and bad people either way. And so a lot of blacks, they're pissed because they're giving migrants.
But they're being disenfranchised, right? You guys are.
Yeah, they're being disenfranchised. $5,000 credit card?
Right.
What?
So these guys are being put up in massive, nice hotels, receiving welfare programs, getting a lot of these things that typically would have been or should have been given to the American citizens, and now they're being given to illegal immigrants without any sort of processing, without any sort of information on if these people are here to become a viable, contributor to society, or if they're just here to milk the system.
And the real issue is a lot of the ones coming here from Venezuela and these other countries. We're not talking about the ones who are seeking asylum. We're talking about the prisoners, the ones who were in prison. They were let out of the prisons, or the cartel who left and are coming to the U.S. because it's easier to commit your crimes. It's easier to do that. That's the issue right there. And it's causing, crime has jumped, and I hear that they're blocking the crime numbers. I mean, that's probably why
there's a ton of major cities in the United States that are not actually giving data on crimes. So you either have unreported crime, or you have crimes that were committed that just weren't investigated or processed. So
right.
You look at cities like San Francisco. As long as you keep what you steal under a certain dollar amount, the police aren't gonna mess with you.
That's
and even
crazy.
If you steal over that amount, the police aren't going to do anything. So the problem is that there's no enforcement and there's no policing. So we aren't seeing the actual data. So again, this is where I was talking about the data that's being given to us is not real time. It's not accurate. It's stuff that's being manipulated and used for a narrative that everything's hunky dory. But those of us that are living on the street and understand what's going on and talking to people that are living in these areas, we know that that's not actually what's happening and that there is higher crime rates. That's why businesses are leaving San Francisco, leaving LA. All of these high crime cities, they're losing businesses, they're losing people because of that crime. So how can you tell us that the crime rate is down if you're losing revenue and business from those in those
I
cities?
mean, we see him on TikTok. Thank God. The only positive thing about social media is we get to see both sides, right? We get to see everything, and you're seeing constantly stores being broken into. Don't want to talk about the assault stuff, but stores being broken into, nobody's doing nothing. The workers are sitting there like, what do we do? And there's nothing being implemented. My aunt is in El Paso, which is right on the border, right next to Mexico. And we call it Mexico. I mean, they're pretty, they don't even speak English, which is cool. I love El Paso. I love Hispanics. I mean, the women are beautiful, right? But my aunt herself is saying she was a Democrat. She switched hardcore because she's saying, what the hell? Actually, here people are losing jobs. Her friends have got assaulted. They're dressing up like UPS workers. They're dressing up like Amazon Flex. Is that what it is? And they're breaking into people's houses. They're squatting in. So she flipped. She's like, okay, I'm voting Trump now. This is ridiculous. And it's just, the people, they don't really get a word out. And Europe, that was I'm starting to see a lot of videos in.
The thing is that Europe opened about the same time we did, but Europe hasn't had the population fighting against it as much as we have in the United States. So Europe pretty much quietly let that all happen, and you're seeing plus lower population size, so it's easier and faster for them to increase the number of illegal immigrants that are going to cause the problems that are going to be there. That's what you're seeing over there right now is it's boiling over as the crimes are now pushing people over the edge. You're going to start to see that happen here in the United States without some sort of massive immigration policy and really stopping things at the border right now and then working through what's already come through and processing it and getting it cleaned up. Because until that happens, the numbers are just going to keep coming. We're going to see more and more of it. And as that number starts to rise, it gets closer and closer to our population size. You start seeing more of what's happening in Europe start happening in the United States. Again, it's all about the population in the
Right.
area happening. It's much smaller in Europe. So that's why you're seeing it happen faster. But
Right.
those numbers opened up right around the same time.
Yeah, and I guess we can say the only reason the US hasn't really seen a massive flip is because we have the most weapons per unit of person by far. So they have to think twice about where they go. That's why they're going into the democratic cities because yeah, they don't have guns as much,
Strict
right?
gun there.
Yeah, they got strict gun laws. So I don't understand. I mean, I get it, but like how much do you need to see? I guess people, I don't know, man. I see some of these people on TikTok.
Yeah, I mean the problem is that you've got a large population that still relies on all of its information coming from the big network TV channels, and so they're not willing to put this out there. They're not willing to say these things. They're going to draw the line that is more in line with what the Democratic Party is pushing, and so I think you've got a lot of people who are very much believing that this is okay and everything's fine.
Right. And it's not to say there's no issues from the Republican side or from the Trump lovers. There's issues for sure. There's always issues, but it's it's a trade-off. Yeah, it's a trade-off though, right? At least there's security there. At least there's cops and police in your neighborhood. At least
things to be better for you.
Right, exactly. So don't mess with my money. The taxes should get everybody. That tax hike should get everybody. Anybody, you're broke forever. I just don't get it. It's oh man, you can't invest. You can't invest. That's insane. And they know better because like Veronica said, the DNC put up a wall.
Oh yeah, the
in
walls.
Chicago.
There's just one wall. There's multiple walls.
Mm-hmm.
So there was one wall that got breached, and all of a sudden the riot gear was out. The police were right there, pushing back out. And it was funny because I was actually watching a video of this guy who had brought a Venezuelan migrant with him to DNC, and he was like, he wants to go meet the people that let him in. So he walked to the gate, to get in, and they're like, "Oh no, you have to have credentials." And he was like, "Wait, what?
You have to have ID.
To get through the wall." Okay, so where do we get credentials? Okay, so that they sent them to the DNC headquarters or the place that was processing the. So they go in there, and he's like, he needs credentials. What group is he with? Oh, well, he has to fill out an application. Literally, immigration policy,
Right.
right?
Right.
Fill out an application, apply, you get accepted, you get your credentials, you come in. Literally, the DNC's process to get into their event is what our immigration policy has been and should be. And yet, we're not doing that at our border. We're doing it at the DNC by the group that is saying we don't need to do that down there.
Right. Right. You don't need ID to vote or do any of this, but you need it to get into our convention.
It's racist to require IDs.
Yeah. Don't just let anybody in your school.
Even that's a loophole now, because did you see in Minnesota, you don't have to be everybody in Minnesota gets an ID according to a bill that Tim Walz passed. So every single person living in Minnesota now has the access to an ID regardless of their citizenship status. So they can now then, as soon as they register for their ID, they are registered to vote.
Wow.
So yes, it's illegal for a non-US citizen to vote in a federal election, but nobody's going to check it. Nobody's going to care. They have their ID. They've been registered to vote when they got their ID, even if they're legal.
It's literally delusion versus common sense here. I mean, the one thing too, I'm like, the young people, they're they're LGBTQ, whatever. Cool. Have your little thing. Great. But why are you supporting Palestine? They will kill you. That makes no sense. These dudes in Palestine are radical. They don't accept that stuff. So how are you? I just don't see how that doesn't go through their head. Go to Palestine with that. They'll cut your head off, right? So it doesn't add up. And we know that, but I'm like, when are they going to see this?
Well,
Or
when you
is it
hear what they're saying, they're being given the rhetoric. So they're calling it a genocide. They call it apartheid. These are terms that have not been met by Israel. So there is no genocide. There is no apartheid. They use those terms because they've been fed those by the people who are rallying them to do this. So it's not people who are seriously wanting something specifically for it. They're using terms that are given to them because they're social justice warriors. And what they don't realize is that those words don't mean what they're saying. And it's only driving more division. I mean, don't get me wrong. I love it because the DNC is eating itself.
right?
I mean, you've got the Free Palestine faction within the DNC who is protesting everything that's going on at the DNC. You have the uncommitted 700,000 votes at the DNC that are not being cast for Kamala Harris because until she gives them an arms embargo from Israel and a ceasefire, they're not willing to support her.
Right.
I think that's great. I honestly, that is how this turns out. Is the radicals within that party will start to eat the moderates, and it will start to become more radical. And
Right.
I think that's the part that we have to let them go and do their thing, but realize that this is all scripted. I mean, if you look at what they're saying and how they're saying it, they're getting this information from somebody and they don't actually understand what it is that they're saying.
Right. Yeah. Well, let's just pray and hope that common sense wins out in this one, because another 4 years, bro. I know
Well,
people say let's move, but where are you gonna go? I
I
mean,
got to be honest with you. I was looking at the 2020 elections, and I think Trump had 74 million votes and Joe Biden had 81 million votes. If you add those up, we had the largest voter turnout that we've ever had in history. Trump would have had the largest vote count as a president with those numbers, and he didn't win it. So it makes you wonder, and obviously with the Dominion and with Smarttronic going through, the CEO being investigated for fraud. And
oh yeah.
I mean, there's a lot of information that's been coming out that it leads you to believe that maybe those numbers had been tweaked. So what do we do to protect ourselves against that this year, especially as we see 8 million illegal immigrants enter the country in states like Minnesota, giving them the ability to register to vote?
We need crypto. We need blockchain technology.
Blockchain is amazing for voting. I mean, it's real time. We'd have smart contracts, so we'd be able to verify people's identities to make sure that they are given the ability to do it. And it would expedite it. I mean, you
Right.
got all these other. You got Georgia saying, "Well, we can't validate our election results the same day." But you've got countries like Argentina and some of these other places that can do it within a couple hours. Makes no sense.
Right. Apple can ID you instantly with Face ID, but we can't vote instantly.
Yeah.
Makes no sense. Yeah, if you're moved to Puerto Rico, shoot. I
Hey,
don't know.
in Argentina, I like Javier Milei.
Yeah, hey, I guess that's one. It's cheaper, huh? Bring your Bitcoin over there.
Yeah.
I all I gotta say is if you're in the stock market, this is a no vote. This isn't even a question for you who you should vote for. You're gonna be broke. There's nothing there for you. I mean, I guess if you're a trader, you'd be okay. You can always short the market. But if you're an investor, if you're a long-term 401k, you're screwed. Taxes, are you kidding me? You're done. Real estate, done. Your gains are gone. You make a 20% gain, you own the government, you owe the government. It makes 0 cents. More regulation, not deregulation. It's funny because I watch financial news 24/7 and I've never seen them trying so hard to not be biased for Trump because they don't want to say they don't like Trump. They probably don't like Trump at all, but they're like we have no choice though. They're like they push back.
Yeah. Was it Kramer the other day that was like, if you're in stocks, do yourself a favor and just vote for Trump for fuck's sake?
Yeah, exactly. Because it's like you don't have to like the guy, but you're screwed. Like you're screwed for a long time, and they know it. They know it. That's why I'm like, there's just no way, man. There's no way. Every time I see a rich white man say, "Oh, Biden for sure," I'm like, what do you got in your closet? Your wife must run your life. You must be run by what's going on with you? I'm sorry. I get
Dad.
You say what?
You're talking about my dad.
Oh, your dad. Your
He
dad.
drank the Kool-Aid, bro.
He drank the Kool-Aid. Yeah,
Wealthy white man who's voting for Kamala Harris because
yeah.
what's the other choice?
Right. What's your other choice? It's crazy. So that's all I gotta say. All right. Well, he's got crypto. He's got crypto. I don't know what you meant by who he's got crypto. All right. So let's do this next. Let's get through the election. Oh, well, first, do you think the Fed? Okay? I remember initially you said they'll wait to cut. You think they're going to cut now for sure? They have no choice. They have to. Okay. Do you think they just hit 25 September and they delay till after the election, or do they hit 50 in September and wait?
I think they 5 because they don't want to look like they're trying to influence the election.
Okay. And then through the rest of the year, nothing, or they keep hitting?
They'll do a couple more.
Okay. I'm with it. I think they do 25, 25, 25. That's my guess for now.
It's slow. It's too little too late, but it's a slow burn that they'll do.
By the end of the year, is real estate higher? I guess that's a weird question because prices always go up. But I guess does real estate strengthen by January or weaken?
Real estate strengthens.
Okay.
Simply because you're going to see an increase in demand, you're going to see an increase in supply, unless we see an election that restores the current administration back into the office, and the agenda for that administration is truly what we've been seeing, which is capital gains tax, corporate tax, tax the wealthy. All those will play a huge role in real estate. You'll see a lot of investors sell off on real estate to get out of the capital gains before that capital gains tax can get passed. So you'll see a huge flood of inventory, and the demand won't be able to gobble it up because we're talking about $1 million estates and stuff like that. So I think you see prices start to crash.
Now it sounds good because play devil's advocate. Oh, well, prices are lower now, but that means everybody who owned a home before 2019, their values collapse.
Yeah.
And if they did take out a home equity line of credit, they're kind of screwed, no?
Well, I mean, they're not screwed as long as they pay their mortgage and they keep their payment on time. But the problem is that there's a mental aspect to real estate, and we saw this in 2008 when home prices started to fall. People started to say, "Well, I'm going to lose all my money." Well, you didn't lose any money; you just lost your equity. So people started panic selling. So you had short sellers, people who could still afford their mortgage, but they were selling their homes because they wanted to get out either before they lost too much money or they lost all of their equity. And then you have the people that rode that all the way down and it finally found a bottom. But that's the problem is that if mentally you can look at it going, I'm in this for the long run. I have a 30-year fixed mortgage. I don't have to worry about selling my house
Right.
and stay in that house. You don't really see those losses because they will recoup. Because we saw from 2009 to 2014, about 2014 is when home prices reached the levels they were in 2008. And after that, we saw a steady increase or a ginormous increase. So you go back and look at the chart, the median appreciation on a home still somewhere between 4.5%, 5%, maybe even 6% because of the recent increases. There's a quick little dip right in there between 2009 and 2014, but it gets right back on that line.
Right. Because I mean, the Fed is, if that even happens, they have to cut. Real estate's the collateral to the global system. Really, it's like 350 trillion. So they can't afford, like, this whole system is running on spending and equity stocks. They can't allow it to happen. So they will end up cutting rates. Maybe that's what they're hoping for. Stocks, I lost you there for a second. I think you're stocks higher or lower by January?
Lower.
Ooh. Stocks lower. Okay. Let's put it this way. If Trump wins, stocks higher or lower by January? Still lower?
Probably still lower.
Okay, that's where I'll disagree. If Kamala wins, I think stocks are, I hate to say it, I think they move sideways because they're still going to go up with rate cuts, but I think they move sideways, and I think it's going to be a weird market. Nobody wants that. If Trump wins, I think we're higher. Crypto higher or lower by January?
I think you can see that go higher.
Yeah, I think so too. Because I think the millennials are going to say, "Oh, taxes. We're not even paying our taxes." Right? Hey, I just met a guy. He said he's not even paying. He runs a business, and it's like a cleaning business. He said, "I'm done paying taxes." He has a house in Mexico. He bought a house in Mexico, and he said, "I'm not paying my taxes. I'm gone." And I was like, "No way." Okay, bonds higher or lower?
Higher.
Okay, I agree with that one. I think bonds are going higher. All right. Anything else? Anything else, Josh?
Man.
All right. Well, we covered it. Thanks for giving your insight, your wisdom, and we'll do this again.
Hey, thanks for having me, brother.
Thanks. All right. Well, that's our macro wrap up. I'm gonna hit the charts for a second, and I'll be back. I'm gonna stream again on Friday to see, what the Fed ends up doing here. Not with the Fed, but what they say, right? It's Jackson Hole is what we're focused on. We're focused on Jackson Hole, which is the Fed. It's just the Fed meeting. They basically telegraph what they're going to do, and we get that over the next couple of days. I'm sure there's a couple meetings today, tomorrow, Friday, and we'll see how that plays out. Number one, the dollar is collapsing. Okay, not really, not like, oh, the dollar currency is collapsing. No, it's just collapsing it's pricing in cuts. Okay, you cut interest rates. You increase liquidity, you increase the supply of dollars, you increase supply, prices go lower because there's more dollars out there, and nobody's going to hold the dollar. You're cutting the interest earned on the dollar. The dollar's already pricing in cuts. I don't think this is terrible. This is good for asset prices, good for crypto, because it tells you that the easing cycle is here, and that's what crypto wants to see. That's what stocks, risk assets at least, want to see. Not terrible. I like this move. I also, oil coming lower, I think it's healthy if we break down, because yes, it'll cause a recession if it spikes or comes down, but it'll reset everything. You'll get more cuts. We get to reset for crypto, not for companies. Companies are going to struggle. Oil companies will struggle. A lot of businesses that use energy, they're going to struggle, but good for crypto, good for risk assets. 10-year yields are collapsing. They're pricing in cuts. The market is easing ahead of the Fed. The whole market is easing ahead of the Fed. And this is positive. You might get a nasty dip, because there's a lot of risks out there with the war, which I don't think it's really looking that bad. But you have a lot of risks. If Kamala Harris is elected, those tax policies are completely ridiculous. They're just ridiculous, right? You're going to see the VIX spike. Hopefully we don't get the VIX spiking. This is what I'm looking at. If the VIX gets above 20 again, watch out. I hope it really doesn't. It'll probably come and touch 20. We'll see how it plays out. But watch the VIX. Once we get above and hold 20, we're in trouble. S&P right now, ridiculous move to the upside. I'm short, so I'm hoping it goes down. I'm not hoping it goes down forever. I'll get long again. But my initial thought is, depending on what the Fed says, typically during the Jackson Hole, the market doesn't move till after Jackson Hole. So we're looking for a consolidation, maybe a move sideways somewhere around here, right? Maybe we move sideways for Jackson Hole, and then the next week after Jackson Hole, we usually move up after that meeting. We'll see how that plays out. I think we could go as low as 545 for a retracement, and then you can see the reverse head and shoulders here. Here's your shoulder, the big head. We come down, right? I put this in the newsletter. If you're not subscribed, subscribe to the newsletter. But this is what I'm thinking we do is, now this has surprised me. I didn't think we were going to go this high, this quick, this fast, but we're up so quick. This means we're going to finish the year strong, I believe. But in the short term, I think we have to consolidate or pull back. I think we need to consolidate or pull back a little deeper before we flesh everything out. And the reason I say that is, other than the risks, you have the Japanese yen trying to go up again, which would unwind the carry trade, which would deleverage markets again, the way it did up here. Now, does it really go up? I don't know. It really depends what the Fed says. If the Fed cuts, this is the bad news. If the Fed cuts and says we're going to cut or pitches the cuts, yes, it's great for real estate. You see home builders moving up, and I'll go over what I see is in play right now for the next 3 months. I think TLT is in play because if you get a recession or you get close to recession or more weakness, bonds go up. Bonds are looking at two things: inflation and growth. If inflation falls as it is, bonds bid up and bonds are bidding up. If growth declines, which I'm not sure it declines that quick. I think people think it will, but I think people see it declining a lot. But I think Biden will come out and re-stimulate or do some other, whatever he has to do. Either way, I think bonds are going to head up. I got price target at 110, at least by October. I could be wrong, but it looks like bonds are very strong. I mean, we've broken this trend. And hey, inflation is down and the economy is starting to decelerate. Manufacturing was bad. So I think bonds are going to start bidding up here. That's my other move here. Now, rates get cut. You might have small caps really try to make that move. Tom Lee has small caps hitting 300 by the end of the year. That's a big move. That would take us past all-time highs, right? That's a really big move. I mean, if you believe in that, you're long. You're long IWM. You're long small caps. The market cuts 3 times. Small caps are much higher from here. Another one is going to be the home builders. The home builders are not slowing up. They're increasing significantly. DR Horton, DHI, KB Homes, Toll Brothers, even though Toll Brothers looks like, I guess it doesn't look that bad. Toll Brothers picking up, right? And you see the RSI starting to curl up here. Builder, First Source, whoever this is, they're starting to pick up, curl up. Lennar picking up, right? Home Depot, which I don't know, maybe not. We'll see how Home Depot go. They need lower rates. And if you do get more financing and more building, Caterpillar should benefit from that. We should see copper start to move up. This is a copper stock. But more than anything, I think you're going to get utilities continue to move up. This is CEG. The utility sector has been gaining ground, and this has nothing to do with the economy more so than it has to do with mega cap, Apple, Amazon, Nvidia, Netflix, all paying for data centers for AI. This is AI, utility, electricity. Basically, all this spending on utilities or on data centers is going to ramp up the demand for electricity. And CEG, Constellation Energy, is the largest. It's located in the largest region of the U.S. with data centers, which is Virginia. Virginia has the most data centers. That's where they have most of their data centers. So we should see, I think Constellation is going to rip up. They had a pretty good earnings and it's not going to slow down. AI is going to, you're going to have a lot of spend on AI from here out. Meta looks good for the chart for being a big cap. I think Meta is going to break out pretty soon. We'll see. And a lot of this comes down to ad spending, right? Facebook, Instagram, a lot of ad spending going into the political. I mean, I guess TikTok's going to make a lot of revenue, but you can't trade TikTok. But yeah, going into the election, I think the revenues are going to go up significantly. Amazon also, we're heading into the holiday season. In October, we're going to get ready for that Santa Claus rally trade. Amazon has been at these low, has been really sideways for since 2020. Not really sideways because it had the dip, but it hasn't broken out. I like Amazon. I like Meta when it comes to the big caps. AMD is doing well. I like AMD. I was long. I kind of cut my long, and I'm gonna wait for a little consolidation and then probably get long again. But this is a big trend for AMD. I like that. What else we got here? CrowdStrike finally came up a lot after that big dip. Crypto season is coming. Again, if Trump is elected, this is the biggest move. Bitcoin headed for 100K and then 150K. I think Bitcoin is done going down. It is strengthening. Demand is there. It continues to increase. Same thing for Ethereum. Chainlink is, has more. I mean, Chainlink had a nice move today, but Chainlink is still my biggest holding. And man, does the development get better and better. They're now being used by Fidelity. I mean, there's a lot of nerdy stuff going on with Chainlink, but I still think it's the best bet. I could be wrong. I just think Chainlink goes to 100 sometime. I thought it was going to be this year. It's looking like it's going to go into next year. We'll see. We still have 6 months, right? We still got a lot of time. We'll see how that plays out. Tesla needs rate cuts. So the market needs cuts. It's easing ahead of the Fed. We'll stay track with Jackson Hole to see if we get any surprises. What moves markets is surprises. So we'll see. We have GDP coming out on, when is GDP? I think GDP is this week, I believe. Let me double check. Non-farm payrolls. Let's take a look together. All right. So today we had mortgage applications down. We had that big revision. The Fed's going to have to cut rates. FOMC minutes. We didn't really go over that, but the FOMC minutes basically told us that it didn't say much. It told us that there was a substantial amount of Fed members who actually wanted to cut in the last meeting. So now that the numbers are getting better for inflation and now that employment is looking worse, they're going to cut. They're going to have to cut. The question is, do they do 25 and do they communicate more, or do they do 50 and communicate more? What do they do? Do they do it all at once, or do they do incrementally, right? That is the question we should be finding out at the next Fed meeting. We'll see what Jackson Hole tells us. Take a look, or keep your eye on initial jobless claims. Everybody's looking for those claims to explode. There's a lot of talk that the jobless claims are not as bad as initially thought, because the hurricane caused a lot of layoffs and you had to get a revision there. So who knows? We'll see. And then you have Friday. I guess GDP is not till next week. I thought it was this week. GDP. Okay. Well, we got GDP next Thursday. So we have the Fed meeting, or not the Fed meeting. We have the Jackson Hole meeting. We're going to try to anticipate what are they telegraphing. Then we have GDP on Thursday. That's going to be big for markets. Are we really decelerating that bad? What does it look like? And yes, this is next week. Then you get core PCE. We know inflation is looking better, but the risk is now recession. The risk is now a collapse or a growth scare. That's what we're focused on. We'll just keep it in August. That's what we're looking for. We'll do a stream on Friday, more than likely, to communicate about Jackson Hole, look at some setups for the next 3 months. Not a day trading channel. Right now, we're not doing day trading, but we will be doing options into the future. For now, still building the course, building the macro course from bottoms up. If you know nothing, easing, central banks, fiscal policy, all that stuff, how bonds work, the bond market, how yields impact the market, all that stuff. But for now, yeah, stay tuned. Good luck, and let's hope we don't have no crazy tax hikes. We'll catch you back. I'll send some videos, some shorts to see what these Fed members are saying. All right. Thank you guys. Stay blessed. Keep lift weights, get strong, eat healthy, take care of your health, learn something new every day. And you guys stay blessed. Thank you for joining. Catch you next time.